So thank you very much for attending. My name is Kevin Hall at Wright Hassel, the VAT partner, as you are no doubt aware. I'm going to share with you the slides, so bear with me. And what I'd like to talk to you today about is the VAT changes that have been happening. For 10 years, it's been a little change here, a bit of a change there. And in the last 6 months, we've had 3 major ones. I'm not going to talk about the domestic reverse charge today. I am going to talk about trading in Europe. So I'll start with Brexit and how things have changed. And then I'll move on to the one-stop shop and how that's been impacted or will impact the plans that you put in place post-Brexit. And then just a small thing at the end. Is it always right to charge VAT if you're not sure? Okay, so Brexit, there's been a number of changes here. And I know we've had pretty much 6 months to get to grips with it, but not all the issues have settled down or been resolved. So I'm just going to sort of walk through what those issues are, which maybe we're a bit more familiar with, the impact of them, the sort of things we might be doing to address them, and then I'll move on to the one-stop shop and how that might interact as well. So imports. I don't just mean imports from the EU, though that gets talked about a lot. The import rules have changed across the board. So it's also changing for imports from the US, from China, from anywhere outside the EU to Great Britain as well. And I do say Great Britain because Northern Ireland is a unique tax jurisdiction for VAT. So I will deal with that differently and separately. The way I always start with how we're going to deal with imports is to ask who the importer is going to be. And the reason for that is that a few years ago, HMRC, they'll say clarified, I'll say changed their policy so that only the importer, the owner of the goods as importer, can claim the import VAT as input tax. That doesn't sound like a big statement, but in fact, if I have a client, for example, who repairs engines, those engines have been used for racing in Italy, and I have a fantastic engineering sector in the UK, and it's a testament to that the Italians would send their race engines to my client in the UK to repair them, get them back into working order and to tip-top race condition, and send them back. And he'd offer an overnight service, a 24-hour turnaround service, so they could be racing again the next day. Now, he was declaring the engines as imports into the UK, paying the import VAT and sending it back to Italy, and trying to put that import VAT on his VAT return. And of course, he's not allowed to claim that back because he's not the owner. And this has been tested. Supermarkets, I certainly wasn't aware, supermarkets have on their shelves many items which they purchase on sale or return. It's not actually their item. Supermarkets were paying import VAT for those items that had come in from outside the EU at the time, and they weren't allowed to claim it back. So they contended with HMRC this policy clarification, but HMRC have put their foot down and said, no, this is what it is. So there's no way around this in terms of paying import VAT and claiming it back. You have to take steps to not pay the import VAT in the first place, such as inward processing relief or return goods relief if you're in Italy, and making sure that the supply chain's been declared correctly at customs. Talking of customs, you'll also need your GB EORI number, as I'm sure many of you are already aware. Pretty simple to get hold of. The EORI number is based on the VAT number that you have anyway, the GB VAT number. So it doesn't take HMRC long to record it, but it needs to be done, otherwise goods will be held at customs, unnecessary delays. and postponed VAT accounting as well. Instead of paying the import VAT physically as the goods clear through customs, I would be suggesting that postponed VAT accounting be used. It's not for all goods, but it's pretty much for most of them. And I'll talk about that in a moment. And in order to declare the import VAT, because this isn't a way of avoiding import VAT in the UK, you declare the import VAT in your VAT return. In order to do that, HMRC will issue a monthly statement, which you download and you use to record in your VAT return. Now, the corollary of all of that for me is there's a lot of communication that needs to happen here. And communication is always a good thing, isn't it? If the goods are being imported and you are the importer of those goods, then you need to be telling the import agent, you need to be telling customs that you are the importer, that this is your EORI number, this is your VAT number, that you're going to be using postponed VAT accounting rather than paying VAT then and there. And in order to tell customs, it's typically not the trader or the advisor who's doing that. It'll be an import agent, and it'll be the transporter typically who engages an import agent or does it themselves. And it may not be you that's paying the transport agent. It may be that the supplier is arranging the transport, so you'll need to be telling the supplier to tell the transport agent, and so on and so on. Now, all of this is vital because the goods are going to get held up at customs if there's any questions raised and the paperwork's not right. But equally, postponed VAT accounting, HMRC customs need to know that that's how the VAT is being paid on import, not just so that they don't sit there and say, well, where's the money, and delay everything, but because they can then produce the monthly import statement, which will be available online. And then you can download it and so on. So communication is very important. Identifying who the importer is very important. We've got different ways of making sales. It could be yourself that's the importer as a GB entity, or it could be the overseas seller who is the importer. They might already have a UK VAT number and they're happy to do it, in which case, why are we worrying about import declarations? That will be for the supplier. Postponed VAT accounting, what we're looking at here is not paying the cash on import, and when you get to the VAT return, declaring that liability but claiming it straight back. To the extent you can, most businesses importing goods can recover the VAT in full, but what that will mean is no cash flow loss at all. And instead of having a deferment account if values are high, or trying to get a loan from the bank or in some other way harming your cash flow cycle, this won't have an impact at all. So it's a great saving, it's free, it's applicable to most goods. It doesn't apply to excise items, so your cigarettes and your alcohol or gifts. But by and large, why wouldn't you use this? There is a time limit to getting those monthly statements we were talking about. They're only there for 6 months. So don't rely on them being there. I'd download them so that you've got them in your VAT record in case HMRC have a routine visit in a few years' time. One of the common questions I get, but less so lately, I think people are probably okay with this now. Do you need authorization to use postponed VAT accounting? No, you don't actually have to write to HMRC for permission to use postponed VAT accounting. You use it yourself. It's self-policing in that sense. But as we've said, you do need to communicate to customs when an import happens that you're using PVA. Otherwise, they can't generate a monthly statement. And they'll be expecting import VAT to be paid then and there, and so on and so on. Now, that's all pretty good news so far. You don't have to pay import VAT, fantastic. You get to put it on your VAT return, it's an accounting exercise, no cash flow loss, fantastic. Another piece of good news is that the import VAT relief threshold, which was £15 sterling, has been raised to £135, the threshold for there being no import duty. but that's a bit of a double-edged sword when you start to go into it. £135 is for the consignment value, not for each item. Yes, there's no import VAT, but if you're working with a non-UK seller, for example, they'll still be required to account for VAT on the sale. So it's not that they avoid the requirement to register for UK VAT, unfortunately. There's also a new import reverse charge that's been brought in here. So if the overseas seller is selling to a UK VAT registered business who makes them aware of their VAT number in the UK, then the seller doesn't account for import VAT, doesn't account for VAT on the supply either in the UK. The customer does, using a reverse charge. This is brand new, and what it means for importers is you've got to be very aware of this £135 threshold. Even if you're not named as the importer, but you're buying goods which you know are going to be imported, you have to be aware that the reverse charge might be required instead of just expecting an invoice with UK VAT on it. Overseas sellers, they will have the UK VAT registration, but not if the sale is through an online marketplace, which is increasingly common. So Amazon, eBay, Etsy, OneBuy, all these sorts of places. If the value is 135 or less, the online marketplace will be responsible for the VAT on sale. It's a bit of an odd one, that. I have had a client come to me saying, UK business, making a purchase through Amazon of a part, requested a UK VAT invoice, and was told, well, you'll have to get that from the seller. And the seller said, well, I'm not charging UK VAT myself. So they went back to the online marketplace, who just said, well, we're not issuing one. That'll be a pillar and post situation. And I think what's happening there, and the online marketplace wasn't saying this, is that there's no requirement for a seller at retail to issue a VAT invoice. And the online marketplace position, I can only think, will be, well, if you told us there was a UK VAT number here, then we would have reverse charged this to you, and there would be no VAT invoice anyway. If we think you're a consumer, yes, there might be VAT on this, but there will still be no VAT invoice. So it's back to that point about communication. It's also an example of the complexity here being introduced by a £135 threshold, which looks like a good thing. So what can you do? Simple things: get your EORI registration, even if you don't think you're going to be importing. I'd get it anyway. It doesn't take much time, and it does mean in an emergency when you're getting stuff from abroad, it won't be held up at customs. Postpone VAT accounting. Why wouldn't you use it? Cash flow saving there. Just be aware of the £135 threshold. If you're going to be ordering stuff that's £135 or less, get that flagged up in your system and address it with as much time as possible. And please communicate, tell everybody. I've got tell the import agent on the screen there. Talk to your supplier, talk to the import agent, talk to the transporter, talk to the online marketplace who's selling the item to you. It's much better if people understand the supply chain that you think is happening and the responsibilities within it, because then they can object and you can deal with these things before they happen. But I do accept it's not always possible, but that's the idea. So exports, surely fantastic now after leaving the EU. Previously selling goods from Great Britain to the EU, you might be caught up in distance selling. You might have to charge UK VAT, whereas now post-Brexit, everything's zero rated as an export, isn't it? So no VAT on sales. you claim back all the VAT on your costs. Life's good, isn't it? Yes, you need an EORI. Yes, you need to keep evidence to satisfy HMRC the goods have been removed from the UK. But is it really that onerous? I'd start to think about contractual terms here. It's the same question. Who's going to be the importer? Is it going to be your customer, or is it going to be yourself as a GB seller? If it's going to be the customer, well, B2B sales, yes, you can see that a customer with a VAT registration in, let's say, Hungary, will account for Hungarian import VAT. It's a bit more of an onerous burden for them potentially. And I have seen that refused. I've seen customers in the EU refuse to account for the import, even though their business isn't VAT registered. So again, communication is quite important. Make sure people have actually agreed to this. But by and large, B2B sales should be okay. B2C sales, a little bit more awkward in that if you're going to make the customer responsible for the import VAT, potentially import duty as well, I'm sure we've all had those, we've all ordered something from China, haven't we, online, and we've been waiting and waiting, and suddenly this card comes through the post saying your item has been delivered, but there's import VAT to pay, there's import duty to pay, there's processing fees to pay, and by the way, you're going to have to come and collect it from our depot, which is X many miles away, only available at certain times. You have to wait weeks to go and do it all. And I don't know about you, but I come away fuming at that point, thinking I'm paying more than I thought I needed to pay, and I'm having to wait longer than I thought I had to wait, and I'm never going to use that seller again. And we don't want that if you're the GB seller. That's not the reputation we want. So it can be tricky at doing things that way. I understand the transporters have ways around this. So it's worth talking to them, and I think many people are already resolved on that side of things. But that's not the only way to deal with this, to get the transporter to sort everything out and keep your fingers crossed that that's the correct way of doing it. I would also be looking at the one-stop shop, which we'll come on to, which will be coming into force in less than 2 weeks now, really. There are other ways even than that. You could route all your goods through one EU country, whether you're planning to keep a warehouse there, some sort of store and distribute. You don't need a warehouse. You don't even need a company. You could just VAT register in that one country and route everything through it. GB to Hungary via Holland, for example. So there's lots of things to think about. That's not a cost-free solution either. What will you do? Will you take the commercially more sensitive route, but administratively easy route of saying customers going to deal with all of this, otherwise I just won't sell to them? Or will you take the slightly more costly, more administratively burdensome route, but commercially a far better route of bringing the goods in with yourself as importer into the EU and taking the hassle out of the whole procedure so your customer gets the best service they can? It's a balance. It's not easy, but it needs to be addressed and looked at as soon as possible, really. And I know many of you have. I have a client who's an online marketplace, and there's been a huge additional amount of burden here. A few clients actually, and one of them in particular is looking to take onto their own shoulders all of these additional burdens. Why? Because when Brexit first happened, sellers were saying, well, I don't want to be involved in getting registered in the customer's member state. So an EU seller, I don't want to be registered in the UK. I'm not going to bother. I just won't sell to the UK. And the UK seller, GB seller, I can't work out what I need to do with the EU. I'm not going to do that. I'll close down my EU market. A marketplace thrives on those transactions happening across its platform. And if they're not happening, they're going to suffer. Their whole business goes down. So in order to keep his marketplace, the whole marketplace alive, they took onto their shoulders the VAT on imports into Great Britain for EU sellers, and also imports into the EU for GB sellers. And it's a huge amount of additional burden. In fact, they had to stop supporting sales into the EU where the EU seller wasn't already registered there for a while they tried to sort all this stuff out. So it wasn't easy, but it's set them up now in a really great position for the changes on the 1st of July. I did want to mention services on Brexit because they're often forgotten about. Again, export of services, what's changed since last year, since Brexit? People often think there's no change at all, and by and large, that's right. I don't want to alarm most people who are supplying services. B2B services, for example, zero rated previously, zero rated now, unless you're in one of the exceptions, in which case you're still in one of the exceptions, and nothing's really changed. There is, however, an opportunity here for many, and supplies of services to consumers resident in the EU previously, before Brexit, would have been subject to UK VAT. Whereas now, not all, but many of those services will be zero rated. And there's no precise legislation in the EU that requires VAT to be accounted for in the EU customer's country. And suddenly we're seeing no VAT where there was VAT before. But only on certain services. There's a schedule within the VAT Act, which gives you a list, includes things like consultancy, information, all sorts of various different things, refraining from competition. It's worth having a look, but there is a risk, and the risk is the use and enjoyment override. And for those of you that may not be quite so aware of this, one part of these rules would state that if a supply, under all the other rules in the VAT Act, the EU VAT Act, if the rules stated that the place of taxation for VAT, place of supply, was outside the EU, but the service was being used and enjoyed within the EU, then the country, the EU member state where use and enjoyment was happening, had the option to require VAT in that country to be paid by the supplier. The problem with that is that each of the 27 member states in the EU have their own option, and it is only an option. So how do you find out which option, which sector has had an option exercised over it by any given member state, and will it be different in any of the other 26 member states? There's no easy way to find out. There will be lists which can be consulted, and I have looked at some in years gone by. They're very often out of date. The EU website isn't maintained terribly well, so it's I'd approach this differently. And if I know some of you have queries on this, I'm quite happy to talk through the way I would deal with that. Financial services also have been affected, and also for the positive here. Before Brexit, a supply from the UK to the EU of a qualifying financial service was exempt. The Chancellor has said, and indeed it's now the case, that supplies of qualifying financial services from UK to EU will be zero rated. No VAT on sale, who cares? Well, you can get the VAT back on attributable costs if you're making zero rated supplies, and you can't if you're making exempt supplies. But still, who cares? Surely most advisors don't really have many attributable costs with VAT on them. Well, a startup company typically has more costs, something technology based, and that's increasingly the case. they'll have even more VAT on their startup costs. With a bit of planning, that VAT can be recovered now, at least to a great extent, but potentially all of it. So it's worth paying attention to services. It's not all unchanging, and there's some real opportunities and threats there as well. I'm also getting queries on the margin scheme. So what is the margin scheme, just so that we all know what we're talking about here. When you make a sale and it has VAT on it, that VAT applies to the entire sale price. And you get the VAT back on your costs. The margin scheme says you're going to be accounting for VAT on your margin, on the uplift between sale price uplifted from purchase price. But you can't get back the VAT on your costs. So if you bought something in with VAT on it, you can't claim that back, and you uplift to make a sale and you account for VAT on the uplift, on the margin, you're paying the same amount of VAT overall, and there's no real benefit. So why would you do it? You'd do it if there's no VAT on your costs. So if you're buying something from an individual or a collector or something with no VAT on that, obviously, and you sell on with only VAT on the uplift, and very often it's wafer thin margins, that's a huge benefit in terms of the VAT. And that can make the difference between a viable business and a business which won't make any money. Now, before Brexit, you could do this margin scheme EU-wide. You could bring goods from the EU into Great Britain. You could sell goods from Great Britain and move them into Europe, and the margin scheme can apply. Since Brexit, you can't apply the margin scheme where goods go from Great Britain to the EU, even when those goods are going to Northern Ireland. Now, there was political pressure applied. People were lobbying their MPs, and I'd encourage the same. And there was a change in that the margin scheme could be used for second-hand means of transport only when it's moved from GB into Northern Ireland. Only, no other member states. Now, we've lost our seat at the EU table. We can't bring too much pressure onto the EU, but I would still be raising this to the attention of your MPs if you or your clients are affected by this. Many of my clients on the margin scheme were saying, well, I'm going to have to just close down my EU market. I'm going to have to let employees go that deal with it. There are answers out there. Margin scheme applied to 4 categories of goods. 3 of those 4 categories of goods, you can import those goods into the EU and continue to sell under the margin scheme. There'll be import VAT, and I can hear what you're thinking, 20% import VAT, whatever the rate is in the EU country, and you can't get that back because you're selling under the margin scheme. Still not possible. In fact, you can use a reduced rate of import VAT. Yes, you can't get it back, so yes, it's an extra cost. But in the UK, for example, it went from 20% to 5%. And on higher margin sales, that can save a marketplace, it can save jobs. So I'd be looking at supply chains when you're in the margin scheme world with EU clients. And some of these are quite surprisingly large, £4 million turnover. Yes, there's administrative burden. Yes, there's additional cost. But if it saves jobs and it saves the market, it's got to be worth factoring into your thinking. So do have a look at that. Northern Ireland, I'm afraid I can't spend much time on this. It's a unique jurisdiction. It's part of the UK. It's part of the EU. And getting your XI number when goods move into Northern Ireland from GB or from the EU is vital. It's not difficult to get an XI number. It's just your GB VAT number with the XI at the front instead of GB, and it allows you to use that number with EU traders and what have you, and to clear goods into Northern Ireland from GB. You'll need your XI EORI number, which is just your GB EORI number with XI at the front again. But these things need to be applied for. They don't necessarily take very long, or it's not too complicated, but you have to do it. The real problem for me is goods which are classified as at risk of going from Great Britain to the EU via Northern Ireland, or vice versa, without there being what the EU would call proper customs checks, proper import duty being paid for goods arriving within the EU. And the problem that the Brexit committee, EU and UK together, the problem the Brexit committee has is identifying which goods going into Northern Ireland are at risk of moving on. And every item moving into Northern Ireland, the question in my head is, do I need to declare this as an item that's at risk? Do I need to do something to prove that they're not at risk? Or if they are at risk, what do I need to do? So that there's a trader support service. It's gradually improving. I'd make contact with them, and again, leave yourself good time. We're back to communication. Let's get what we can sorted out in advance. I know it's not always straightforward. There's various examples and what have you there, which I haven't unfortunately got time to run through. By all means, ask questions on it if this is affecting you. But what should you do? Analyze your supply chains. Comes back to that thing. Bit of knowledge. Go and get your XI number and your XI number as soon as you can. Now, all of that was preparatory for the one-stop shop. You'll have set up ways of trading with the EU, I'm sure. Exports from GB through different means into the EU. In a couple of weeks, we'll be in the one-stop shop regime in the EU. That'll be from the 1st of July. It's not just about the one-stop shop. It's not just about e-commerce, and you'll see articles online saying e-commerce. You'll even see EU explanatory, rather lengthy explanatory documents simply headed e-commerce. It's not what it's all about. It's not even just about goods or goods going from Great Britain to the EU. It is about these things. I don't want you to go away thinking it's not about this stuff. It is, but it's wider than that. And I'd encourage a deeper understanding, which I don't think has been reported in the press very well when you go and look at some of these articles to try and understand how it affects you. When I try to understand something like this, I try and get to the heart of it. What's it really all about? And what I think this is really all about is a rule change in the EU where goods move from one EU country to another. And where goods move from one EU country to another, it used to be that for many businesses, you charge VAT in the country where the goods started. And the change is that now VAT will be accounted for in the country where the goods end up. Now that's a bit of an issue, because if you're in one EU country and you've got all the VATs in various different EU member states to account for where you send goods to customers everywhere, you're going to have to register for VAT in those countries. So 26 other member states. I've been working through with one client. We thought at a minimum the cost of maintaining a registration, 4 quarters every year, it's going to be 100,000 at a minimum, probably a great deal more. So what can you do instead? Well, options have been also brought in through this new legislation, which will allow for a simplification. It doesn't mean it's as simple as it was. It means it's more simple than it would otherwise have been. So there's still cost, there's still administrative burden, there's still a delay in getting it all set up. We've got 2 weeks, let's see what we can do. You've also got a bit of an extension to apply for these registrations and have them retroactive from the 1st of July. But there's a bit of a 6-week queue, I'm hearing, in certain countries. So I'd get going now on it if you haven't already. There's also changes to rules on imports, not the actual place of supply rules necessarily, but there are simplifications for that. And if you're an online marketplace, if you're selling through an online marketplace, there are rule changes for that too, more burdens for the online stuff, which is a complication, as we've seen, for the sellers. So I'd look at the supply chain. I'd examine, you've got different ones, small differences make a difference for VAT. Make really big differences in outcomes sometimes. So I'd look at the individual supply changes with their little differences and understand the VAT impact of that. And if you need advice, take advice, because you're better off getting this right from the start than having to retrospectively change things or pay penalties or what have you. Once you understood your current supply chains and the VAT impact, can I resolve this? Can I make things better? Are there tweaks I can make to the supply chain? Are there registrations I can make that would make things simpler? One-stop shop simplifications. There's more than one-stop shop. There's an import one-stop shop, but it's only valid for consignments of €150 or below. And it will only apply where goods come from outside the EU to somewhere within the EU. In other words, if you're a GB seller and you sell into Hungary and you ship direct to Hungary, there will be Hungarian import VAT. And if you're going to be declaring yourself as the importer, you're going to have sales VAT, presumably in Hungary if that's where your customer is, or in the country where your customer is, if that's elsewhere in the EU, and you'll have to register potentially in both places. What you can do against that is register for the import one-stop shop. And that will remove the Hungarian import VAT. And it will mean that you can account for the Hungarian import VAT on your sale in that import one-stop shop registration. It also means that you can import directly to France, no French import VAT there either, and you can declare the French sales VAT in your Hungarian import one-stop shop registration. It's very, very useful where consignments are €150 or below. You might even consider, if you've got a €200 consignment, trying to split that, but obviously it's not always possible. One item itself might be €200, you can't really divide it. But there's planning to be done here, and it will be helpful to many businesses. There's a non-union one-stop shop. That's only for services, despite the term non-union. If you're non-union selling goods, that's not for you. There's a union one-stop shop. That's only where goods go from one EU country to another. That might still be for GB sellers who bring goods into the EU in one country and move on. Could be any combination of the above. One of them, all of them, however it is. I've got one client that none of these, although they could use some of them, none of these are really appropriate for them. And they'd rather go without a one-stop shop and do the whole thing in the member states where they're involved. Just one thing before I leave there. You'll see distance sale being used. Distance selling last year was if you sell from one EU country to another, so long as you're under the distance selling thresholds, which are quite high, 30 or 100,000 euros. If you sell from that one country to another, you account for VAT in the country of supply, where it's leaving from, if you like. Now, distance sale has sort of changed. For the union one-stop shop, distance sale means from one EU country to another. For the import one-stop shop, distance sale means from outside the EU to somewhere inside the EU. So I can kind of see what they mean, but actually they mean different things when you come down to it. So sort of recapping slightly, if you do nothing, you're a GB seller with no EU establishments, that's important, and you're selling via Amazon or something, and you're selling to a consumer, because B2B rules aren't really affected. It's you take that number of your customer and reverse, and you don't have to charge VAT anyway. What you're supplying is goods, let's say in this example, and the goods are going from Great Britain to EU in this example. And let's say in this particular scenario, the goods are valued below €150 when they're imported. At this point, in this scenario only, the online marketplace is going to be responsible for the VAT on the sales. And that's a huge benefit. As a GB seller, you don't have to register for VAT in the EU. You don't have to register for VAT anywhere. You don't have to register for a one-stop shop. You zero rate the sale from the UK and you let the Amazon do the rest. And that's a huge advantage. Problems come if you're the electronic interface, in which case you've suddenly got all the headache of registering for VAT in the EU or one-stop shop or what have you. Or if you're the GB seller and you don't just sell stuff via Amazon, or it's not just €150 or less, or sometimes it's drop shipping one EU country to another, and so on and so on. You have to have your sort of thinking head on, whether that's reporting by exception so that you can engage with it thoughtfully, or whether you know you've got quite a few of these and you set the solution up in advance. You need to take account of it all. I wanted to see if I could set out a few slides that would show the different combinations under a one-stop shop. But I like my maths, and I did 6 factorial for the 6 different factors, and it turns out there's 720 combinations. In fact, each factor isn't binary. There's maybe more than one way for each factor to come out. So we're probably looking at over 1,000. And you'd be glad to know I'm not going to bore you with 1,000 combinations, 990 of which won't be relevant, I'm sure. But I'm going to take you through, if I can, very quickly, just a few different examples. So what if the scenario we were talking about just now, you weren't selling via a website? Again, if you do nothing, you're going to have import VAT, and you're going to have to register for VAT for the sale in the EU somewhere. But you can use the import one-stop shop. You're going to have to register for that, which is going to be a pain, and it's going to be a bit of a cost. But once it's there, for your consignments below €150, it's going to be much better than registering for VAT hurriedly in member states where suddenly you've got a sale where you didn't have one before, and so on and so on. That is going to be helpful. But as I say, sometimes you'll be selling stuff above €150, and what are you going to do about that? So it's not a complete solution, unfortunately. Supplies of services, so land-related service, you're advising on something which is going to be built in Spain, then you're going to advise on something that's going to be built in Italy. Do you have to register for VAT in Spain at the moment? Do you have to register for VAT in Italy at the moment? Well, if you're registering in various different EU countries because you're providing services which require VAT in those countries, you're going to be able to use the non-union one-stop shop, register in one country of choice in the EU, one member state, and account for VAT in all the other member states where you've got a VAT liability. Really helpful if you're one of the people that's caught by these rules. Union one-stop shop, this might be the answer to what can't be accounted for in the import one-stop shop. So, for example, if your consignment's over €150, you're bringing it into one EU country, and it's going on from there to somewhere else in the EU. Then there's going to be import VAT, yeah, for sure, but there's going to be a movement of goods between one EU country and another, various different ones, I'm sure. So instead of registering everywhere, use the union one-stop shop. It does mean you've now got two one-stop shop registrations in the EU now, not just one. So we're beginning to build the complexity and the expense, but maybe this is better than 27 registrations doing nothing, and maybe it's better than closing down an EU market. But again, it's a balance, isn't it? There's one thing to say on this, which is that if you import into an EU country and you can't use the import one-stop shop, you can't use the union one-stop shop registration for sales to countries, to customers in the country of import. Now, obviously, it's better if you can just import direct from GB through Hungary into Hungary where the sale's happening, to Romania where the sale's happening, Sweden, you'd have to register for VAT locally there to account for the sale. So this isn't a complete set of simplifications. It might be that you have to adjust your supply chain and route all goods through one country. Not talking about a warehouse, just ask your transporter if it can come through Holland and then out to Germany or France. Maybe it makes less sense when it's going up to Sweden or over to Portugal or Romania or something, but is it possible? There's also a €10,000 threshold. So if you're really dealing mainly with one country and distributing a little bit to other countries in the EU, but not really very much, you can still carry on doing that if you route everything through this one country in the EU, this adjusted supply chain, because you've got a €10,000 threshold where you can continue to charge VAT from that country where it's been imported first. And this is what I've been suggesting that many people do from the 1st of January when Brexit happened. And it's going to work quite well going forward, where you can't use the import one-stop shop. But it does have its expenses. There's no straightforward solution, unfortunately, but there are solutions. So to wrap up the one-stop shop stuff, it's not only about one-stop shops. It's not only about e-commerce or goods. You can see it does touch on other areas, which if you're involved with, we need to think about. The risk is if you don't do anything or you don't do anything in time, you're going to be registering for VAT in every member state, maybe getting penalties there. So it's back to the same old routine. Look at your supply chains with a bit of that knowledge and sort out some solutions for them as early as you can, so that you can get those, join the queue as it is at the minute, so you can get those solutions in place. There is a Brexit grant. Many of you may already have taken it up. Many of you might be thinking I'll do that later. It's £2,000, so worth having. There are 2 deadlines, and you'll see that the deadline is 31st of August. Actually, it appears there's a deadline for the 30th of June to make first contact for this grant. So you're basically provoking a grant offer from the government, and then it's 31st of August is when you need to get all your invoices and documents in by. The website's on the screen there. I really would encourage you to apply for it. Might take a while to get your offer through, but if you don't even try by the 30th of June, you're just waving goodbye to 2000. I'd give it a go. I said I'd touch on this right at the end. If in doubt, and I have to say in the domestic reverse charge, HMRC's advice was if in doubt, don't charge VAT. I've never seen that. I find it extraordinary. I think I can sort of understand why they're doing it, but it can lead to problems. And here's one of the problems that it did lead to at the end of last year. One property company was supplying another construction company with some services, notoriously difficult in the construction sector. You've got all rates of VAT in play, really. Could be standard rated, could be reduced zero. Deluxe decided that they'd just charge VAT because they weren't sure at the standard rate. Their thinking, I'm sure, was, my customer, they'll be able to recover it. And the customer tried to recover it, and HMRC said, you can't have that back. So the customer went back, seething a bit, I'm sure, to Deluxe and said, we can't claim this VAT. HMRC saying it shouldn't have been charged in the first place. Pay it back to me, please. So Deluxe had to go through, frankly, rather a painful process, a Section 80 claim, where you're having to explain to HMRC what's happened, ask for the money back, HMRC say why, and then there's a huge discussion about, well, HMRC finally accepted that it should go back, but they're not going to pay it back, and you have to justify why they should be able to in this case, all sorts of painful processes. And in fact, by the time it came to actually paying money out to the customer, Deluxe had entered administration. And SCL then had to go through a round of trying to get the money back directly from HMRC, and in fact they couldn't in the end. And it's just an example of how wrong things can go if you get stuff right at the outset. Deluxe had just taken a little bit of advice at the beginning. this would all have been avoided. I know it's a grey scale. I know you can sort of risk it and sometimes nothing will happen. But it is a risk, and it can be dealt with and avoided. It goes without saying, I'm afraid you can't rely on anything I've said today. It's a little bit tongue-in-cheek, but in all seriousness, I don't know the facts of the scenario that you might be thinking about. Now, if you do need to rely on it, by all means, come and talk to me, have a chat. I'm quite happy to talk through things without a charge until we can work something out. So there's my contact details if you want to contact me afterwards. But if there's any questions now, now's a really good opportunity to raise it. I'm sure it'd help other people as well, and I'd be happy to talk it through. Thank you. Thank you for listening. I don't know if we have any questions.
Hi, Kevin. It's Mark. Hi, everyone. It's Marcus from the events team. So we've had one just come in.
Hi.
Who can claim this Brexit grant? And that's from Anisha.
If you go into the website, and thank you, Marcus, for picking that up. Anisha, if you go into the website that I put on the slides, there is a section that tells you who can claim that grant. Now, obviously, I haven't claimed the grant myself, so I haven't actually been through the entire process to know what complexities there might be around that. But I believe you need some sort of establishment or presence or something in the UK, potentially for the last 12 months. But I've not gone into it in detail. So I'd encourage you to have a look at that website, and if in doubt, contact the suppliers. But otherwise, I don't think there's really a restriction on who can claim it. Any industry, any businesses, as long as it's being used for imports or exports of goods to do with that are affected by Brexit, if you like, I think they could claim. I think the moral of the story is make a claim and see how far you get with it. That would be my suggestion.
Perfect. Phil has said the grant appears to be available only for goods, not services.
Yes, I think that might be right. I think that might be right. If you've got just one set of goods going one way or the other, that would qualify you, I'm sure. And if the advice you took encompassed services and goods, presumably you'll get the grant for the advice to the extent it covers goods. But as I say, it might be something that's simply worth putting the application in and letting the government sort out the vagaries of how it's limiting this or not. And the government wants to help traders to trade, so hopefully it's a fairly light touch. But I'd encourage an attempt at application. But yes, Phil, if you can link it to goods, I think that's even if there's a lot of services as well, I think that's your way forward.
Perfect. We've got another one saying, "Hi Kevin, I have a client GB sells to EU goods over 150 euro. They consider registering for VAT in an EU member. Do you need an intermediary?"
That's a really good question. I'm not going to give a really straight answer, I'm afraid. The really straight answer is I don't think so. What is an intermediary in this instance? It's where a one-stop shop is registered for by somebody who isn't established in the EU, and the legislation requires an intermediary to be appointed in that EU member state to look after the one-stop shop and basically represent the business to the local tax authority. However, it's not required where there is an EU-UK mutual assistance agreement. But it's not clear what that is. There's several of them. Now, my understanding is that there is an EU-UK mutual assistance agreement, but I know some of these agreements are disputed or still being hammered out after Brexit. So my view is, if somebody in the EU tells you you have to have an intermediary here and please pay 1,500 quid a year for it, I'd push back on it and say, well, the UK, EU have a relationship and we don't need an intermediary, and challenge it. see what they say, see what comes back. Some EU member states I know are treading a very cautious course, and they're treating the UK as if they're not in a relationship with the EU. It's worth pushing back and seeing what happens. Potentially, if you're just at the planning stage, worth going with another EU member state that's a little bit more relaxed about this and accepts you don't need an intermediary. It'll be cheaper. I don't know if that helps fully, but hopefully, I think we do have an EU mutual assistance, and you don't need an intermediary. And I'd go back to anybody who says you do on that basis. But you need to keep a bit of an open mind just in case we're not in that place.
Perfect. We've got another one from Joe saying, for sale of goods from UK to Northern Ireland, 20% output VAT is charged, but you need to make customs declarations and keep proof of export. Is this correct?
We're sort of straying a little bit into duty territory, which isn't my thing in customs declarations. I see it a lot. I know a bit about it, but I'm in that category of a little knowledge might be a dangerous thing. And I don't know all the different corners to explore. That said, I am a VAT specialist on this, and I do know the corners to explore here. The goods which move from Great Britain into Northern Ireland cross a border from a VAT and duty perspective in the Irish Sea. It is technically an import into Northern Ireland and into the EU. Now, to that extent, yes, you're going to need to make customs declarations. You're going to have to declare import VAT, potentially import duty, and all that sort of stuff. However, import duty between the UK and the EU has been waived, but you need to be careful of origin of goods and all that sort of thing. You need specialist advice on that. Import duty. The import duty is identical with the VAT on the sale that's made, GB to Northern Ireland. So it's being made to be as close as possible from a VAT perspective to as if you were selling goods from London to Newcastle. You're selling goods from Coventry to Northern Ireland. You just put VAT on your invoice, declare it on your GB, your UK VAT return as output tax. The question about importation, to zero slowly in on that, I've not focused on the customs delays and deferrals. I know there's a big row going on with the EU saying there's been a deferral, but you can't defer it any further, and the UK unilaterally trying to defer the customs declarations further. So my understanding is that there's some sort of light touch in there at the moment, but to the extent that it's there or being deferred or being argued over, that is a duty and customs clearance question. For VAT, it's going to remain that you declare VAT on your sales invoice to goods which go to Northern Ireland. At risk is a bit different, as we were saying, but that's the answer from a VAT perspective. I don't know if I've really helped on the duty side, unfortunately. If you contact me afterwards, I can put you in touch with people who are specialised in duty and customs, and I can put you hopefully in connection with an answer there.
Perfect. We've got a couple more, Kevin. I think we've got time for a couple more, if that's all right. From Nick.
I can keep going. Yeah.
Digital downloads sold to various EU consumers from UK-based website owned by UK VAT registered trader. Is that goods or services from grant purposes?
If you could just repeat that for me, Marcus, please.
So, digital downloads sold to various EU consumers from UK-based website owned by UK VAT registered trader. Is that goods or services for grant purposes?
So it's an EU-based website. Got it. EU consumers, so not a business, and a digital download. Okay.
So, sorry, is it a UK-based website owned by UK VAT
UK-based website
trader and then EU consumers?
So this is one of those where it's very important. So I'm just going to stop sharing. I hope you got all the information, those who are listening, that's required there. So I'm just going to have a quick look in the Q&A section. Bear with me. So I'm very much a VAT specialist rather than an IT specialist. Right, I've got two sidebars up. That can't be right. There we go. So digital downloads sold to various EU consumers from UK-based websites owned by UK registered trader, goods or services for grant purposes. Got it. It's services, unfortunately. So the EU grant, which appears only to be for goods, may not apply to you. As I say, I'm surprised by that the government's line is very much trying to help those suppliers that are affected by Brexit. The government might argue that these rules haven't really changed for that kind of supply, and you don't need a £2,000 grant, and that might be a sticking point. But maybe there's no harm in making the application, particularly if you can find a single supply of goods that you need Brexit advice on, which that advice also encompasses services. But sorry, Nick, I don't think I'm giving you an answer that would be very popular there, but hopefully there is another way. Marcus, did you say there was another question as well?
You've got one more at the top. There is a lot of rumour and conflicting advice around the use of employment rules post-Brexit in the EU. For example, I'm a tax advisor with business and personal customers in the various EU countries. Some are saying that providing advice to personal customers based in France now requires French VAT to be charged and French VAT registration, but this is only in France and not in every EU country. B2B is still reverse charge mechanism. Is this correct? And how do you know which EU countries matter?
Yeah, really good question, this. I've been saying since last year to watch out for use and enjoyment rules. I mentioned during the talk how they work, if you like, and what problems they can cause. So just to set the example up again, if you have, for example, a UK advertising agency talking to a UK customer, and the UK customer is saying, my product is fantastic, I want to advertise throughout the world. And the UK advertiser says, yep, I can do that, no problem at all. And they set up, as part of this, they set up a poster in Italy on a billboard there. Now, last year, the Italians might have said, well, this is happening in Italy. Where's my Italian VAT take from this? And the UK, being part of the EU, says, well, it's being taxed in the UK, this one. And the EU will take an overview and say, okay, EU's getting its tax take, play nicely, everybody, and leave it at that. Now that we've left the EU, the dynamic changes, and the EU says, well, I'm not getting any tax take at all from this. The UK is getting it, and the EU isn't getting a slice of that action. And this use and enjoyment law allows Italy, if it wishes, to impose Italian VAT on the supply which involves an Italian poster board, because it's used and enjoyed in Italy but taxed outside the EU. Now, with that in mind, this really good question is asking, how do we know if Italy has chosen to impose Italian VAT on the advertising supply in that case? It's also asking, what if we have a billboard in France? Getting the answer for Italy won't tell us anything about France. How do we find out if France has exercised its option in that industry, in advertising? And you'll have other industries as well asking the same question. There isn't a simple, up-to-date list that you can consult. There are lists, I think, and some of them are out of date. Certainly the last time I looked at them on the EU website. And we can go down that route if anybody wants to contact me afterwards. I'm quite happy to go down that route. The practical way of dealing with this would be to go to the country where that supply is happening. Now, if you're lucky enough to have contacts in Italy, I'd be talking to them. If you're already doing some trade in Italy, maybe have a chat with that customer or that supplier, or maybe their accountants or accounting function, and they might be able to make some headway for you. It might even be that you have to apply directly to the authorities, but at this point, we're now beginning to weigh up the complexity of, are we going to put a question in directly to the authorities, or are we going to examine the lists that there are and try and work out what should be happening based on those lists, and will it be up to date, and what risk are we prepared to take on that side of things. What I will say is that the use and enjoyment override rules were used pretty lightly. I think it's a case of if you start from, well, there is no tax on this, which is the case, but you can choose to impose taxes on it in the right circumstances. So countries are going to have to actively decide to tax a particular industry or way of doing business. And I think very few have taken the time to do that. So, for example, the UK, when we're part of the EU, we would only exercise that option on things like hire of goods or telecommunications and things like that. Not very much at all, certainly not consultancy services and what have you. But each country is different. And if you're concerned about it, and maybe there is a risk there, so it is concerning, this is something to address, but it's not straightforward. So I know that's not a complete answer, but there are ways to get further forward than just risking it. And if you make contact with me, I'll be quite happy to talk you through it without a charge at this stage. And let's see where it takes us. I hope that helps a little bit. Marcus, were there any other queries?
There's a couple more if you've got time.
I'm happy to keep going.
How can a GB seller register for IOSS?
Okay, that's a really good question as well. I'm aware I didn't cover that in the talk very well. So let's walk through the process. You're a GB seller, happily selling goods from Great Britain to individuals in France, Germany, Holland last year, charging UK VAT because each country was less than 30,000 euro turnover. Fantastic. Then Brexit happens, and you're thinking, well, I'm going to register for VAT in one country, and you'd sort of choose where that's going to work. Or you'd export from the UK and you'd make your customers responsible for the import VAT. And good luck to them and keep your fingers crossed, or something along those lines. It's a little bit messy, potentially, or a little bit expensive. And then the 1st of July rules are thrown at you, and you're thinking, oh, what am I going to do? And you decide that all of your items are 150 euro or less in a consignment, or they can be made to be so, 2 consignments, for example. You don't have business customers, or to the extent you do, that's already sorted. We're focused on B2C, and you're going to use the IOSS. You've got a choice of which country to register for the IOSS in, if that's good English. Who are you going to choose? I mean, there's a risk, isn't there, that the first country that you send goods to is Romania, let's say. You say, right, to clear it through customs without import VAT in Romania, I'm going to register for the IOSS in that country. And then you find you can apply that Romanian IOSS to the rest of the country, the rest of the EU, sorry, every other country. You're going to have the Romanian language barrier to deal with. It's going to be quite distant. You might want to load up with other registrations as time goes by and you become more successful. And you'll be doing that in Romania as the country where everything else is registered potentially. I'd start by thinking about which country is best for you long term. You want someone where English is spoken quite well. You want somewhere where the rules are set up in a user-friendly way, not something which is going to be awkward and difficult. Oh, it's always going to be awkward and difficult, isn't it? But better. You want somewhere that's geographically quite close in case you need to start routing goods through that country and adjust your supply chain. And typically what I'm seeing is Holland is good for the geographic stuff. They speak English extremely well. They're very open and user-friendly. Ireland, I see being used quite a bit. It's English. You can just go onto their website and do stuff yourself. But it's not great geographically if all of your goods are going to go to Ireland, then ping back across to Germany or Poland or something. So there's thoughts to be had there. Then what do? You've decided which country, and this is maybe where the question is really driving. How am I actually going to get my registration number for the IOSS now? You're going to apply directly to the authorities for the IOSS as you would if you were registering for VAT normally in that country. Now, if you're a French national who happens to move to the UK, you'd be going to France, wouldn't you? You'd register for that directly with France, talk to the French tax authorities in French and get it all sorted. But by and large, I suspect most people, and most of my clients certainly, are looking for somebody who can put that registration through for them. And then every quarter you'll be submitting a return, an IOSS return, recording the VAT that's been accounted for in all the other member states. And if you can get an accountant to do that for you, maybe someone in the UK can do it, but I'd normally recommend putting yourself in contact with an accountant in that country of choice. And getting do I need an intermediary? How much is that? Finding one that doesn't need one of those. Do I need a VAT representative? It's different, but still expensive, a couple of grand a year. Can I do without one of those? Many EU countries will say you don't need one. You found the geographic location. You found that they speak English. You found that they're good user-friendly people. You've got a good accountant locally who's going to be able to keep up to date with what the rules are and how the local interpretations change, and you pay them to register you for the IOSS. Would be my preferred route. I do have a network of contacts across the EU. There are one or two people in the UK who are worldwide and will be able to help you to register in the country of choice, maybe even help you compare countries as well. So I can put you in touch with them if you prefer as well. But it's a bit of a do your due diligence task, check the background, make a decision, and then get help to get the registration from preferably somebody local. Would be my suggestion. As I say, do contact me if you've got any queries on that.
Perfect, thanks, Kevin. You've got one more. Do private customers in the EU buying from our website for products from the UK need to apply for an EORI number?
No, the goods will simply clear through. The transporter should do that, and the supplier should be taking account of that.
Okay, superb, thank you. That's all the questions that we've had. We've had a couple of questions regarding sending slides and the recording. I'll personally send the slides to everyone now, or when we've finished. The recording won't be available probably till next week now, because we tend to put it on our website and edit it first before it goes out. But I will send everyone the link to that website when it's ready, if possible. But yeah, that's everything. Thanks from me. Anything from you, Kevin?
Yeah. No, just to say thank you very much for everybody who attended and for all of those questions. I was delivering a webinar earlier this week and had 0 questions on it at all. It's really helpful when there's this level of engagement, because other people will feed off the answers as well. So thank you very much for attending. I hope you found it useful, and do please get in contact with me. I'd be more than happy to talk through issues. So thank you very much. Enjoy your day.